Have you ever looked at a complex analyst report and just wondered, how do they even come up with this stuff? Well, today, that's exactly what we're going to do. We're going to take a real-world analysis of a huge company, Intel, and break it down. We'll translate the jargon, look at the charts, and figure out the story the data is actually telling. Oh, and just a quick heads up, this is all about understanding the process, not about giving out financial advice. Okay, let's dive in. So this is the big question, isn't it? How do the pros sift through mountains of data to get a sense of where a stock might be heading? Well, today we're opening up that analyst toolkit. We're going to see step by step how they approach a tech giant like Intel and try to make sense of its next move. All right, so our subject today is Intel. I mean, they're a massive player in the semiconductor world. Chances are you're using their technology at this very moment. But before we get into the nitty-gritty, we need to set the scene. And right now, Intel's been having a pretty good run, beating expectations. That actually makes this analysis all the more fascinating. Let's start with a number that helps you grasp the sheer scale we're talking about. This was Intel's revenue for just the third quarter. Not only is that a huge number, but it also came in 4% higher than what the experts were predicting. Yeah, a number like that definitely makes people pay attention. And if that last number wasn't big enough for you, check this out. That's Intel's market cap. We're talking about a company valued at over $182 billion. On top of that, the stock's been trading up near its 52-week high. So the big picture? We've got a massive company doing really well recently. That leads an analyst to their very first question. Which way is the wind blowing? So with any kind of analysis like this, you have to start with the basics. And the most basic, most fundamental question is, what is the overall trend? Is the stock price climbing a mountain, sliding into a valley, or just walking on flat ground? It sounds simple, but getting this right is absolutely the most critical first step. And one of the go-to tools for figuring that out is something called a moving average. The best way to think about these is like safety nets for the stock price. It's really just the average price over a set period, say the last 50 or 200 days. If the stock's current price is staying above those averages, analysts see that as a really healthy sign of strength. And this is what the report found for Intel. This is huge. The stock isn't just above one moving average, it's floating above all the key ones. For an analyst, this is about as strong a bullish signal as you can get. It's like having multiple safety nets all stacked up, suggesting that this upward trend is really solid and well supported. Okay, great. So we've established the trend is up. But that's only half the story. The next question is, how much oomph is behind this climb? Is it a powerful surge, or is it kind of running out of steam? This is where we shift from just looking at the direction to actually measuring the momentum, the force that's driving the price. And now, this is where things get really interesting. See, a good analyst isn't just looking for data that confirms their ideas. They're actively hunting for contradictions. So what do you make of a situation where the stock price is hitting new highs, but the engine driving it seems to be sputtering? That is a classic red flag they are trained to look for. This setup has a special name. It's called bearish divergence. And this slide shows it perfectly. You see the price going up, but this key momentum indicator, called the MACD, is heading down. Think of the MACD as the price's accelerator. So when it's weakening while the price is still rising, that's a big warning sign. It's like a car that's still rolling uphill, but you can hear the engine struggling. The upward force is fading. And here's another tool in the kit, the RSI, or Relative Strength Index. You can think of this as a speedometer for the stock on a scale of 0 to 100. Analysts use it to see if a stock's price has moved too far, too fast. Now, Intel's RSI is pretty high, which shows strong performance, but it's getting awfully close to that 70 mark. That's the level analysts call overbought. It doesn't guarantee a drop, but it suggests the rally might be getting a little overheated. So let's just pause and put this all together. What do we have? Well, on one hand, we've got a really clear, strong uptrend, backed up by all those moving averages. But on the other hand, we have two different momentum indicators that are starting to flash some pretty serious warning signs. And that's the central puzzle of this analysis, a strong trend fighting against weakening momentum. The report really boils the risks down to these two specific data points. First, that negative MACD number is the hard data showing that momentum is fading. And second, that high RSI reading is a strong signal that this rally might be, running on fumes a bit. These are the specific things that have the analyst raising a yellow flag. All right, so after all that, what's the final call? How does an analyst take these conflicting signals and turn them into an actual actionable strategy? Well, it's all about weighing the evidence and then drawing some clear lines in the sand. And this is where the rubber meets the road. The report lays out the whole game plan. See that key price? That's the line in the sand. The strategy says, as long as the stock stays above that level, the bullish case is still in play, with the potential target up around $40.35. But if it breaks below that support level, then the bearish case takes over, and we could see a drop. So the overall plan? Ride the wave for now, but keep a very close eye on that key level. And honestly, this quote from the report just sums it all up perfectly. It's a two-part strategy. In the short term, you stick with the trend because it's so strong. But looking further out, because of those momentum warnings, it is absolutely critical to listen to what the company itself says is coming next in their guidance. So we're left with this classic Wall Street showdown. It's the irresistible force of a strong trend versus the immovable object of weakening momentum. One is screaming go, while the other is whispering, careful. The analysis has laid out the battlefield, and now we just have to see which side wins out.